Ladies and gentlemen, today I'm gonna show you a strategy that is unlike any other swing trading strategy. Cause in a swing trade, you buy here and it normally takes 2 weeks to a month to hit either your target or stop loss. So instead of a month, what if you could have a strategy where your target is hit within 2 days to a week max? Isn't that incredible? Instead of having all your funds jammed in all your existing trades for a month, whereas here in 2 to 3 days you get to book your profits and move on to your next trade. Again in another 2 to 3 days you complete your next trade. This is how you make your money run and not just sit in one place. Alright, let's head to the strategy. You'll be needing two indicators, MACD and volume. We would be combining these indicators with price action to take a trade. Price action is for finding trades and setting the trend lines, and the indicators would be for our entry. Before I show you how to draw the trend lines, let me first show you how this strategy works. Here's a trend line I've already drawn. The bottom line is called the support and the top line here is the resistance. The basic idea is generally when the price is at a support, people buy, and when it's at a resistance, people sell. Hence, how a swing trade works is, here it touches the support, we buy, and when it reaches the resistance here, we sell. In a span of 15 days, we make 19% profit. But what we're gonna do is quite different. We don't want to be a part of the entire swing trade. We'll get in the trade only when there's high momentum. We get in, the trade jumps, and then we are out. And how we're gonna do that is using two indicators, MACD and volume. Now, if you're wondering how the MACD works, I could explain to you the blue line is a result of one exponential moving average subtracting another exponential moving average, and again the orange line is another exponential moving average. But which line is what does not matter. What matters is whenever there is a crossover of these two lines, the histogram turns green, and when the lines again cross over, the histogram turns red. So immediately after the histogram turns green, it tells you the stock momentum is high and it's ready to boom. That's a signal of entry. Here it touches the support, bounces up, and then there's a MACD crossover. Now although you have two confirmations to enter the trade, I urge you to first check another very important indicator, the volume. Here you have the volume which tells you how many people are buying and selling. In order for a stock momentum to shoot up, there needs to be a spike in the volume, at least twice the size of the volume it regularly gets. Here is the average volume the stock gets, and here where we are looking for our entry, the volume is about twice the size of what it normally is, and that is our final confirmation. And now we are ready to enter, but by the time we got a confirmation, the stock price already shot up, and that's okay. This is not a regular swing trade, this is a momentum trade. And let's say we got a chance to enter here. That is 10% in 2 days. Which do you think is better? 19% in 15 days or 10% in 2 days? Let me show you another example. Here again it hit the support and bounces up. There's a MACD crossover happening and a spike in volume. You got your 3 confirmations. Let's say you get an entry around here. You take the trade and you get 13% in 3 days. Let me show you one more example because this one's a bit different. Here you can see we found a trade where it kinda hit the support, and here the histogram as well turns green. But we would never have taken this trade. You wanna know why? Look at the volume. Barely any difference. So we keep observing, and here it again touches the support, reverses neatly, and the histogram turns green. This time look at the volume. So let's say just before the day closes we take our trade and 7 days later, we gained 24%. That is the power of volume. In this scenario, there's massive volume and it went up 24%. In almost the same scenario, but no volume, and the results nothing. Now let's move on to how to draw these trend lines. Now when we are drawing a trend line, we are basically connecting the points where the massive amount of buyers and sellers. So all you have to do is find a point where there was a major reversal, connect it to another point of reversal, and the next thing you know, when you stretch that line, you have a trend line. Now you do the same with the resistance line. I'm not going to get into much details as I've already made a very well detailed video on how to draw trend lines perfectly. You can check that out, I'll link it in the description. Now back to the strategy. One thing really good about a strategy is that it's applicable in any time frame. Here I have a chart with 5 minutes time frame, and if you notice, there's a very neat trend line here, and I'll connect the resistance as well. So when we have a closer look, we can see here almost all the criterias meet except for volume. So we won't be taking this trade. Whereas here we find a similar situation, but look at the volume here. It looks good and hence it makes for a good trade. Now again here a nice setup, the histogram turns green, there's an amazing spike of volume, but one element is missing. It did not hit the support line yet. If you follow all the criterias, this is a wonderful strategy, but it has its own flaws, which is the stop loss. In a swing trade, you generally have a big target with not much to lose when you put a stop loss. Generally, a risk to reward ratio of 1:3 or 1:5 is followed, where your risk is 1 part and your reward is 3 parts. But in a momentum trade, you cannot place your stop loss right below where you buy. You need to place it below an area of value, which would be the trend line in this case. Hence your risk to reward ratio would be 1:2, where you would be risking 1 parts to gain 2 parts, or in some trades even 1:1. To some this might be a deal breaker, but here's the interesting part. A regular swing trade with the trend lines might get a success rate of 50 to 60%, but here the success rate is nearly 75 to 80%. So which trading style should you follow? Well, that depends on the type of trader you are. To learn about the strategies I use, I have plenty of simple and easy to understand videos that you can check out at my channel WealthZ Trader.